This is the DTS Market Letter Review Day. I do this about every 6 weeks or so. Originally intended for the subscribers to the market letter to review the fine points of the letter, kind of, what's been said, what's been going on, how the letter's doing, see if you have any questions. I decided to open it up almost from day one to everybody because there's no reason you can't be here to hear what's going on. It's mostly, about how the letter works and some of the past market comments. This is a really good one to attend because there's a lot of good stuff to look at here and a lot of good analysis about what's been going on and what's going to be happening here. So let us begin. I apologize to somebody who was here Monday night. Monday night we were doing the bi-weekly scanning session and he came late and asked if it was recorded. I told him yes. Whoever that was, I apologize. It's not recorded if you're here. Monday was not recorded. I never record the Monday night sessions. There's just, there's a limit to how much I'm going to record. It's just extra work to do that. Today is, however, though I was thinking it was today. I got confused. So today will be recorded and will be on the site in a few days if you happen to have to leave early or whatever. So let's take a look at what we're going to do today. I'm going to show you a letter, give you the general information. The daily market letter is just that. So the letter comes out every day. It's intended for day traders. It does give a full market review in terms of the three time frames, the day trading time frame, the swing, if you want to call it, I call it intermediate, and then the long-term picture. Every one of those is ranked individually. We'll take a look at that. But it is intended for day traders, this letter. There is a letter for long-term people that gives market analysis and long-term positions. It's called the long-term trader. Later today we can take a look at it. So we're going to go through and give you a quick look at the letter, how it works, talk about how it's important you have a bias plus confirmation. That was really a key thing over the last 2 weeks. And talk about, a lot of people ask QQQ versus SPY versus the Russell 2000 or small caps or whatever. And the natural bias that I have, and which is some of you may be confused with me because I have been bullish, for a long, long time on the big picture of the market. I'm naturally a bearish person. I mean, all of you that sit around and say, "Oh, this is nuts, this market," and I agree with you. It is. But nevertheless, we follow what the market does. You don't fight the money that's coming in. You play with it. So the market, if you haven't heard me say this before, if you are trying to make sense out of the market by understanding news, by understanding the economy, or by understanding a systematic thing of how things work and what makes them, the money move in terms of news, economic factors, you will lose your butt every single time, guaranteed. You may win by coincidence. In other words, you thought there's a good economic report out, the charts are going up anyhow, you made money, you thought it was due to the news, but you will get your butt handed to you. Anybody want to give me a one and testify to that? The market is a video game. It's all it is. It's a video game, and that's how you should look at it. You look at the screen, you look at the final result of the buyers versus the sellers, the constant war that's going on, the constant battle between the two armies of bulls and bears, and you see who's winning that battle every day. And that battle is fought and determined by the people with the money who absorb all of the news and economic data and whatever it is. The market is the biggest forward-looking discounting mechanism there is, and you will never be on target by trying to interpret run-of-the-mill news and make money from it. Does everybody get that? I can't say it any clearer than that. It's just an absolute fact. There is nothing to discuss about it. You guys at least understand what I said, even if you don't agree with it? Do you understand those comments? You have to look at the right things in the market or you will constantly have your head handed to you. There's an article I did, and most of you have seen this already, but in case you're a little bit newer, there's an article that I did that I just love about news because it finally kind of put together all my thoughts about it that I've been saying in different events. And it is posted on the free stuff page. And let me just get you over there. And it's actually the very last thing on the page. It's under articles. It's called Listening to or Studying All the Wrong Things. Well, Paul, read that. What is it possible to learn what things to focus on? Yes. Paul, you ready? Ready to write this down? In the news, focus on absolutely nothing. Ignore everything you hear. Doesn't matter. Look at the reaction to the news. Where can we see the reaction to the news? Can anybody tell me where, when 280 million people read the news and those that have money want to make their bets on what's going to happen. Is there anywhere like a Vegas booking system where we can see where those bets are being placed, whether or not the market's going higher or lower or a stock's going? Is there any? Yeah, the charts, exactly. So that's my point, is that we want to look at the summation, the end result of everyone's digesting of the economy and the news. And it usually is nowhere near what the face value of the news or economy is, right? So that's not the purpose of today's section. I just want to give you a little, introduction to that. And read that article over. It's just one of my favorites, so I think you'd like that. So we're going to take a look at the big picture. I got into that because I was just talking about my natural biases, that I'm bearish. You wouldn't know it. I prefer to short rather than go long if everything's neutral, because things fall faster than they rally. But no, nothing in the market ever makes sense. When you are rallying to insane levels, like you could argue we have done over the last couple of years, the bears always win every argument about the market. The bears always sound smarter. The bears always seem like they know what they're talking about. But what else? What else do you know about the bears? They sound smarter. They have every logical argument behind them. Everything they say makes sense. They have a full grasp of the news and the economy. What else is true about the bears, though? Anyone? Yeah, well, they're wrong. They're wrong. They're losing money. They're losing their shirts. They're getting killed, but they sure sound smart while they're getting killed. And meanwhile, the bullish people are, well, yeah, I don't really get it, but you know what? We're still going up. And that's what you have to do. You have to let go of all of that desire to be smart and intelligent and figure it out, because you can't figure it out. You have to just see what everyone else has figured out, and as the charts do for you. We're going to take a look at the last couple of months' big picture. That's really been an interesting time and a really important lesson to learn from it. They predicted 1 out of 10 bear market. Well, actually, no, Robert, that's not true. That's not the right saying. They have predicted 20. They have predicted 90 of the last 10 bear markets. They have predicted 90 of the last 10 bear markets. Yeah, true. We're going to look at the last couple of months, and then we're going to review how the letter works on an intraday basis over the last few days. Okay. So let's take a look at some of this stuff. Purpose of this meeting, just very simply to show you how incredible technical analysis is. Technical analysis is absolutely incredible. It positively is. There's an argument out there that it's good, it's bad. That argument is between people who know technical analysis and people who don't know technical analysis. If you don't know technical analysis, if you don't understand it, if you have just this very rudimentary understanding of it, you think it doesn't work because you don't get it. But when you get it, it just absolutely works. It's the greatest thing out there to get the odds in your favor in doing the market. If you want any other proof, it's this. It's that I've been doing this a long, long time, and I just want to make money, and I don't care what it is. If there was an indicator, if there was a news service, if there was something that would make my job easier, I would love it. But there's not. It's studying charts is it, period. This also is to help you show how worthless news is to understanding the market. It's to provide a great education for you, some of the stuff we're going to go over today, and to show specifically how the market letter works. So that's what we're going to do. Let's get right to it here. And let's go back to March 7th. That was a kind of a key date to me. As a review, back here on October 1st, we already had a couple of meetings since then, so I'm not going to go over history. But I went bearish 2 days before the drop started. And by the way, have you ever heard some of the great pundits talk like this? Maybe people you go or attend webinars. They'll say something like, well, when we drop to this area, we're going to have to see if the buyers step up and buy this area. And well, if they don't buy this particular area, then prices are going to fall. And if they do buy that area, we're going to rally. Did you ever listen to people that talk like that? And then, of course, no matter what happens, they're right. They come back, well, I told you if we got this area and buyers came in, we'd rally, and there we go. I was right. But you never learn anything in the moment. I mean, there's never a call, there's never a play. So you have to learn to take action on your convictions when it's time to take action. And that's all I read and see. That's all I see, right, Murphy? That's all that's out there. I mean, I'm not all. I mean, there's some people who do a good job. I don't mean to say it that way, but 90% of what you listen to is just this garbage out there. It's just a week later. Well, I told you. I told you if we hit that area and we sell off, that we'd sell off. I told you if we don't sell off in that area, we'd go higher. That's all you get to hear. So my point of saying that is, I don't speak that way. I speak. If I'm wrong, I'm wrong, but I speak definitively. On October 1st, 2nd, I said we are going lower. Period. Right? It's in writing. It's in the letters. It's everywhere. I've shown it to you. So we dropped. On December 26th, confirmed on January 3rd, I think it was, we're going higher. Where are we going higher? You know what my answer was? Does anybody know? When we were down here in January, I said we're going higher. Went back to bullish midterm bias. What was my answer? Anybody that follows me? Where are we going to? How high? Because this is an answer. This is a comment I don't normally give, but it's just being honest. Well, actually, no. Eric, I said that as a focal area. I said I really didn't know. That sounds good to me, TJ. I don't know. But I said I really didn't know. This has become a very sloppy pattern, and this is the key area to test here. This is one of these times where I said, you know, we'll get to this area, but I don't know if we're going to get through it. You know what I mean? And I did feel this is going to be the area, but when we get here, we had to see how we're going to react to this area. This is one of the rare times I say it, but that was when we're down here. Just saying we get up in this area. I can't tell you 3 months ahead of time, you know, and you never just short, period. You just start saying, okay, what do we start looking for? And I'm going to show you exactly what I was looking for and how I handled what happened. But the point is, this was a short before we dropped. This was a long after that one green bar, and there were no false calls in between. You know, no false calls. We have a guy here that's in my area in Florida that's a financial planner, and you know he has a good commercial, and he's right. You know, he's out there saying, you know, if you're getting close to retirement, blah blah blah, you can't have all your money in the market. Great. Well, the thing is, he has been predicting the market to crash for 3 years. He's saying the market's going to, you know, and he has these commercials on it. You know, they keep going, you know, and every time there's a little drop for like a week, he comes on, well, we told you this crash was coming. And then, of course, 2 weeks later, we're way higher. And he still has these commercials running about the market drop, and we're going to new all-time highs, new all-time highs. So it's just kind of funny anyhow. But, you know, he's right in what he says in terms of your planning, but he's just dead wrong on the market every time he talks. So this is the area we had to deal with. So this is going back to March 7th. I want to show you exactly what happened here and how I handled it and how I, you know, what I'm talking about when I say this stuff. So when we got to that area, this was a wide area. This is not a precise area. This is not something like you hit and you go, okay, you know, we're going to probably start selling. Now, this is a big, wide area on a weekly chart, and on a day-to-day basis, it covers, you know, several days of trading. So it's not quite clear what's going to happen. So we got to this area in here, and I was looking, when we got in this area, I was looking for some kind of confirmation. And the whole way up here, we just had no confirmation. Now, as we got right into this area, I started to become very sensitive to any kind of confirmation. This day right here, when we went underneath, it was really a big hourly pivot. You see it as a bottoming tail there, right? But when we went under that, I said, okay, time to start shorting in the midterm period. All right. That day, I took out a couple shorts. I think I already taken one the day before. I think that was on the March 3rd, I believe I started shorting. And the market dropped down the next day and didn't go anywhere. What's the result of that? I was early. Well, on the daily chart, it looks really, really early, right? On the weekly chart, well, we're still kind of in that area. So what's the point, though? I was wrong on the daily chart, but what's the result of being wrong? Well, I took out some shorts. One stopped, one I replayed and stopped, and H-band hit a 4.5-hour target, a 6.5-hour target, and it's still open with the 6-hour target. So in other words, it's averaged out to about a 5.5-hour trade. So I made money shorting because I got the right stuff. Did you guys get the second educational email I sent you a week or two ago? The one about equities being used to pad your market bias, so to speak, to give you some padding. Well, this is an example of that, right? If I had done the market, I would have had to stop out of this, right? I would have been wrong. I didn't do the market. I did some stocks. One of the stocks was a home run. One of the stocks was H-band. I shorted H-band right there as it broke down that day. Home run. And in case you didn't understand what this means? This means that this, in other words, when a trade stops out, you lose your risk amount, whatever you're risking, 100, 1,000, $1,500, whatever you're losing. H-band on the first target made 4.5 times what I risked, a risk reward, 4.5 on the first target, 6.5 on the second target, and the back part of it's still open with a 6-hour profit. So by doing the right things, and by the way, I don't think that was lucky. I think it's almost the other way around. The 2 trades that stopped out, well, one I replayed, I was using very, very aggressive hourly chart stops for a weekly chart setup. If I would have used the daily chart, they would have worked, or they would still be in play. They wouldn't necessarily worked. Neither one of those have dropped much, but they'd still be hanging in there. So I went with the more aggressive entries and got a home run. So we are in that area. Now let's continue what's happened since then. Well, what happened since then now, this is the area I just discussed right here. And we ran up, and now here's the trigger. Boom, boom, boom. We get the biggest green bar on the chart since January. This ignites a rally. This one kills a rally. I wanted to start shorting intraday this day. I was checking. I didn't do it. But I did start some shorts since then at the close that day. So we engulfed that bar. And I've now since then taken out more midterm shorts. Again, these are, I don't swing trade. I don't like holding 2, 3, 4 days. I think it's distracting to my day trading. It's a very difficult time frame. Again, if you go to the free stuff page, there's also a video there under miscellaneous videos. Nope. Under educational topics, beware of these 2 time frames. I think if you're swing trading, having a hard time, I think there's a reason why, because it's a very, very difficult time frame to try to trade. So where are we? So as of right now, I have a bearish bias. Now, because the weekly chart is just kind of in a fuzzy area, so to speak, I want to make sure that we keep moving down. And the way to do that is to get confirmation by this word right here. Can you see where I'm pointing? Yeah, it kind of turns to a cursor because I'm on the camera, but every hourly chart failure is what I want to see. So yesterday, right, we gapped up and held. That means the hourly chart, I don't have the chart in here, the hourly chart had a higher high, higher low, right? That puts me on pause for a moment to say, okay, let's make sure what's going to happen here. Well, today we then put in a lower high, lower low. So the hourly chart fails. It confirms the daily chart should continue to move down. And I am now, didn't take them yet, but set up a couple new midterm shorts. Okay? So to me, this is exactly how you do it. And this is the picture I like to play, like short for 2-3 months, long for 2-3 months. I don't like the daily chart trying to hop back and forth every couple of days. And you may find the same if you get some experience at it. You can do it. I think it's just hard. If you're going to take 2 to 3 day overnights, you should be using the hourly chart to do it. So any questions on that? That was section 1. We were going to go through the last couple of months and what's been going on, and that gives you a very good rundown. It's been a very, very interesting time from a technical point of view. It's been I think a really great time. Hey, Joe. Because next we're going to take, and I think we're going to run through an intraday basis, how I do it intraday. And by the way, all this stuff is just technical analysis. This is all just a decent understanding of technical analysis. I'm very big on multiple time frames, putting them together. I'm very big on a failure pattern confirmation to confirm the bigger time frame. There's a lot of stuff that that you'll learn that is very, very, very useful. Technical analysis understood in its proper way is almost not related to what most people learn. I hear people send me charts. I see people, they send me charts and they talk about support and resistance, and I'm like, you don't even know what you're talking about. This is just ridiculous. So, really getting a good understanding, this is, I think, the way to go. I just want to remind you that all of you who are tuned in, make sure you take advantage of all the free stuff that I offer to you guys. There's a whole page called the free stuff page on the site with prior events, videos, educational lessons, all kinds of good stuff for you to take a look at. And also just a reminder, after this meeting, make sure as soon as I'm done talking about this next section, the intraday charts, make sure you immediately log out so you don't accidentally slop into me talking about the DTS services. I very rarely do that, but I am going to do that today when we're done here, okay? So I'll give you a heads up. You can make sure to get out of here right on time so you don't get any of that, all right? That'll follow this. Do you say support? Oh, no, support and resistance are key to technical analysis, Paul. It just, what most people understand about support and resistance is just, to me, it's archaic. It's just wrong. It's just, if all you know is there's something to the left. In other words, I use 4 criteria to evaluate support and resistance. And what a lot of people call support isn't support. Paul, have you ever seen a resistance area and prices just blow right through it, right? And you're looking around and the typical person would say, well, this technical analysis stuff doesn't work. That's resistance, and I shorted there. Well, that's what I'm talking about. I'm talking about people that do that just have a first-grade understanding instead of a college-level understanding of what's going on in a chart, because most people just get this very, very simple concept, either because they're just reading basic lectures or charts or instruction online somewhere, or they're learning from somebody who doesn't really get it. I know people that teach this stuff that, to be honest with you, don't really get it. I mean, they kind of get it, but they don't really get it. So everything has its place, Paul, but there is no one thing. There's no one thing out there. Support or resistance, they work or they don't work depending upon a lot of things. How old is it? What kind is it? How are you approaching it? What happened between the time that you were there and you're here? There's all these things that affect how it is. You can get to a resistance area and have it be literally zero resistance sometimes, or support. Depends on all those different things. If you want to get a lot more of this talk, I do a video every once in a while called a bookmark on the market, and I haven't done one in a while. October 17th is the last one, but it does cover the October drop and exactly what I use to evaluate and call the fall for those 3 months. And there's a lot of good educational stuff in there as well, very high-level stuff as far as technical analysis goes, stuff that I wouldn't even expect most people to really fully understand for a long time, but that's a good video. I'll be due to do one. I'll probably do one very soon. Bookmark on the market part 4. All of them, part 1, 2, 3. They're all on the website if you want to take a look there. Okay. So now I'm going to pull up a daily market letter and give you a look at the intraday analysis. How does technical analysis differ between looking at a weekly, monthly, daily chart or looking at an intraday chart? How does that differ? Anybody? How does that differ? What's the difference? Technical analysis applied to big time frames, talking about holding positions for weeks, months, and intraday time frames holding for hours. What's the difference? What's the difference in how you use technical analysis? Right, Chuck, you're never wrong. I mean, you're I should just give the mic to you one of these times. I'm not real sure who you are, but you're never wrong. I mean, you always have the exact right answer. You are correct. Doesn't matter at all. No, it's all relative. What is day trading? I was going to do a little video on this and put it in the beginner section, but for some people who are scared of day trading because it sounds scary. What are you doing? Here's the simple concept. Instead of buying 100 shares of a stock and trying to get a $2 move over 2 weeks to make $200, you buy 1,000 shares of the stock and try to get a 20-cent move over 2 hours to make your $200. That's the difference. It's really all it is. You're buying a highly increased share size because you don't have the overnight risk or benefit. You can't, other than a stock being halted, you can't get stuck with your position, so you can get out whenever you want. You can always limit your risk. So you're able to take a larger share size and make the same amount of money on just a smaller move. A tenth of the move, 10 times the share size, and you make the same money. That's all it is. That's all really it is. Here's the daily market letter. I'm starting back on the 20th. I said I'd go back 3-4 days. I'm going back about 7 or so. It's a long letter. You get it as a PDF. So I'm going to show it to you in 3 sections. There's the top letter. There's a link here how to use this letter. You should absolutely use this link if you're going to do it, if you're going to subscribe to it and take a good look at how that works. Then there's, usually I have some opening comments in here, like there's some blah, blah, blah. It just, whatever I feel like saying that day. Could be a funny joke, Could be FOMC meeting today at 2 o'clock, whatever it is. And then there is this important section with the 3 outlook categories. Okay, intraday, that's the day trading outlook. Midterm, that's the next several days or weeks. And then there's the long term. That's the big, big picture. I'm talking about avoiding 2000 or 2008. I'm talking about not having the next true bear market. This has been max green for me for 10 years, just FYI. Literally never been off that for 10 years. Notice the tradability though. And this is an important scale that I put on here. It's not just are we bullish or bearish. What does tradability mean? What does tradability mean? No. Well, yeah, good point, Paul. Yeah, when you're talking about a stock, yes, tradability can mean the liquidity, but here we're not talking about it. We're talking about, the whole market, every stock. What are we talking about? By the way, if you want to, there's not a whole lot written about the market letter. There's just a little bit on the services page, but you can also take a trial to this. I would encourage you, all of you, if you are with the market at all, it doesn't cost you anything to take the trial. There's no credit card. You can just take the trial. Just go there and just put your name and email, and you'll get a week trial to it. You can see all this for yourself. Yeah, what it really means is like right now is a good example. Look at the market right now. Big picture. Is it time to sell your IRA? No. We're still bullish, but it's not a time to enter anything. In other words, we just rallied for 3 months. The desirability to get in new positions is 0. As a matter of fact, it just went to a bearish midterm. If the midterm outlook is bearish, right? How can you say it's a good time? You see what I'm saying, everybody? And this is where these different times. Does everybody understand this? It's kind of important. So in the big picture, if you're holding on to stuff for months and years, it's not sell time. We're still bullish, but we may pull back for 3, 4, 5 weeks, right? So if you've been holding stuff for 5 years, you're not even caring what's going on right now. But if you hold on to stuff for 2, 3, 4, 5, 6 weeks and then you sell, it's time to sell and be short. Make sense, everybody? It's the same thing with intraday. Intraday hops back and forth all the time because it's the intraday pattern. We could be in a very bullish time period. And the same thing with the intraday outlook, midterm outlook, the tradabilities. You can have times where we're up 6 days in a row and we're still bullish, but the tradability goes down to 0 intraday because it's very difficult to continue to play long. So those are the 3 outlooks. And then as we scroll down, we then get to kind of the heart of the section, which is typically 2 charts. Typically there's a daily QQQ chart and an hourly QQQ chart. Sometimes I'll put the SPY there. QQQ or the SPY, which should you be looking at, everybody? Which is the secret chart, QQQ or SPY? And by the way, while you're answering that, here's the bottom of the letter. The bottom of the letter just has the econ for today. It's designed to be like your one-stop shop for a day trader. Here's your econ, your earnings coming out. Here are intraday and swing bullish and bearish watches, and here are longer-term bullish and bearish watches. And then there's a little, you can't quite see it, but I'm not going to pull it up. There's a little educational lesson there, okay? All right, so back to where we were. So what was my question? Right, doesn't matter. QQQ, SPY. I look at them both all the time, every day. When they're identical, like they are right now for the most part, doesn't matter what you look at. What's important to know is when they differ. When they differ, it usually means you're going to have a very sloppy period of time coming up. I will occasionally look at a lot of other stuff. The Russell 2000, individual sectors, all that type of thing can help put together a good composite picture of what the market's going to do, including sector rotation, etc. Matter of fact, the reason I took H-band was because I saw the financials back then fail on the breakout. It's one of the reasons I thought that was the top. We ended up running up for another few days, but the financials took a huge divergence to the market, and they usually don't do that all by themselves. So it'd be interesting to see how that's all going to play out. So here's where you have your market commentary. There's a daily chart that's marked up 1, 2, 3, 4. Intraday chart marked up 1, 2, 3, 4. One are the odd numbers, the resistance areas, even numbers, the support areas. Dotted lines basically mean it's not real support. It's fictitious support, meaning that the break of the support would be a short opportunity. Solid lines are generally real resistance areas, and sometimes there's a wider, thicker line, meaning it's real support, but it's a wide area anywhere in there it could catch. Okay. People say Russell. Paul, Russell typically does lag on the way up and lead on the way down. For a good rational reason for that is that money goes into the big cap stocks first. When they get overpriced, it filters down to the smaller caps. And likewise, those smaller caps, those people are scared if the market looks toppy because they're going to crash first, so they get out of them first typically. That is a pretty true thing. I discuss it in the bookmark on the market part 3, which is on the site, like I said. So I put in here what happened yesterday. Who cares? Well, it's educational. To discuss what happened yesterday in more technical terms rather than layman's terms, I think helps education. So read through it, see if you like it or not. Then the outlook for today, what I expect to see happen, possibly in the midterm pattern and as an intraday pattern, and a precise exact play for the day. Now, this is FOMC meeting day this day, so there's no play given. And yesterday's accuracy, there was no play, so there was no rating on it. So I'm going to fast forward a day, and I want to just take a couple days and kind of give you a chance to see what we're going to do here. What happened yesterday, and now we're on, this is the, what is this? This is going to be the 21st, March 21st, okay? Outlook for today, I said the midterm to bearish and very tradable. I believe we saw the high for a while, blah, blah, blah. Intraday we're gapping down to that pre-market base, so it may be tricky, but I think we're going to go right through that. Where to short is the trick. If the first 5-minute candle is solid green, then short under that low. See, very precise comments. This isn't, oh, gee, if we drop, then we're bearish, and if we rally, we're the Yogi Bear method of trading. Yogi Bear's quote on this, investing in stocks, right? I forgot how it goes, but something like if stocks go up, then you buy them. If they go down, you sell them. So there was a play there. It was said to be going to be a confusing day. The next day we go up. The rating on the prior day, there was no play. On this particular day, I was looking for the market to break down. It actually held that area and went higher. So there was no play done, and the call to be bearish was actually the wrong way. And it says it right there, blah, blah, blah. There's no play actually triggered, but looking the wrong way, period. So what happened, once again, midterm, blah, blah, blah. Intraday play today will be to start to short under the 5-minute low. If the opening 5-minute bar is green, there's a good chance if we have a narrow day, so if it does not happen, sit on hands. Another important thing about understanding the intraday pattern is there's sometimes where it's better to not try and overreact because you just have a narrow day, a very difficult day. You have to know if you want to play the market to break out or break down, or if you expect a break above an area to be shortable or a break below an area to be shortable. Depends if you're going to be in a narrow day or an expanding type of a pattern. So play here was to short. Based on the prior day, excellent home run. Intraday play would be to short under the 5-minute low. The market gapped down a little bit, tried to rally, and then collapsed. So this is a home run day following the letter for what it said. This is the day we put in that engulfing bar. I had called it here in the letter. And keep in mind, this red bar that you're seeing, the play was to short before we opened that day, right? That was yesterday. So if you're following the letter and trading the market, you encompass that whole big red day. What's going to happen today, blah, 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 blah. As far as intraday pattern bias, area 3 is everything for the bulls. If it is broken during the first 30 minutes, ignore it. If the trade is managed for 10 o'clock, it's more likely we will see that market try to consolidate for a while today or have a weak rally, which will eventually lead to afternoon selling. Be patient, as the market will likely be choppy early on. As of now, there's a neutral to weak open, so look to short the 15-minute sell setup that stays below 179.80. And again, if you read the rules, it explains itself a little bit in a very simple manner, but it means we're going to rally up and then roll over on a 15-minute chart, basically. So we'll see what happens the next day. The next day, we did roll up right in here and roll over. Analysis of the prior day, perfect. It's more than likely. Again, this is the last 4 or 5 days. This is not, this is just what happened recently. and it quotes what happened there. 15-minute sell set below 179.80 was a perfect call. Got that whole move down. We now have the big red bar and a little doji sitting here. This will be a difficult time coming off for the last few days. The plays is short the 15-minute sell setup in the 180 area. What happened this day? Perfect, shorted right near the high. Now we're into yesterday, right? Yeah, this is yesterday. Perfect, shorted right off the high. Plays to short the 50-minute sell setup in the 180 area. So again, perfect play yesterday. So this was yesterday. This is the last letter because this actually takes us through yesterday, right? Yeah, that's all there was. So what did it say for today? Today will be tricky, but there's one pattern there to be reliable. If the market goes sideways for 30 minutes, trading between 178 and 179.50, and then trading below the low of the day and yesterday is a short. So I don't have the next chart here because this is what was said this morning. But take a look at your charts. I'm not going to pull it up because I'm not logged in over here in the room. But take a look at the market today. Look at the QQQ. We went sideways for 90 minutes between 179.50 and 178. So the short was below 178, and you would have made a nice killing on it. So this is what the market letter does on an intraday basis. Any questions, anybody? Any questions? I suggest that if you day trade, that you do give this letter a try. The people that subscribe to it swear by it, live by it. Again, you can take a free trial there. No questions? You guys had this wonderful opportunity to ask me anything you want about the market, about the past, about the future. You're all logged in. It's 3 o'clock. You got to be. It's 3:30, 3:15. You got to be pretty much done with your day trading. I don't like to trade the afternoon really much at all. No questions? How do they swear by it? Well, they've been subscribed to it since I opened DTS. Sometimes maybe they swear at it. Tono, I'm not sure, but it doesn't matter to me. Just take a trial, see if you like it. If you don't like it, then don't do it. But I think it's a very helpful thing for a lot of people. Is this accurate enough to withstand futures leverage effect? I don't know what that means, Paul. What do you mean withstand futures leverage effect? There's no such thing. The futures follow the QQQ precisely to the tick. Futures are nice to trade because you have big leverage. It doesn't affect the chart at all, but yeah, there's nice leverage in futures. But if you make a good trade in the Qs, you make a good trade. If you took the futures, you'd be able to have much more profit for the same amount of money leverage, but it doesn't change the chart at all. I'm not sure I understand your question, Paul. How would I use it? Well, this letter again, I'm going to, in a minute, if you accidentally get caught listening to the second presentation today, which is about DTS Services, there's other services out there, but this is for day traders. So you would use it to form your market bias, Tono. In other words, it's very important when you're day trading. We like to look for unique trades, but for the most part, if you're going long market stocks and the market has a bearish bias, you're going to be struggling like crazy. Some people will actually trade the market itself, trade the futures, like Paul was saying, and you can use this actually to trade by. Naturally, it's done before the market opens, so it's not like you're in a day trading room where somebody's constantly saying what to do. But the guidance is there in the morning, and if you're not trading the market itself, then it's a good guide for the stocks you're trading, in that to know if you should be looking to short rallies or to buy pullbacks. Most people, the way most people trade when they're new is that they're very cautious, which is kind of a bad thing sometimes. If cautious means you're not sure what you're doing, so you're waiting for too much confirmation, traders start to short just about the time you should be going long, and vice versa. So you need to have the confidence to say, yes, I know this is going to be a bearish day. I'm going to short this rally, not wait until the market drops 100 points to short. Does that make sense, Tono? So it gives you that confidence to say, hey, until you know what you're doing on your own, to say, hey, you're supposed to short this rally up in here. Okay. The letter comes out between 8 and 8:30. About 8:10 is the average time. Never been past 8:20. You guys are all stuck now. We've now started the second presentation about DTS Services summary. A few things. I sent an email to all of you. If you're here, if you're a member, which there's a lot of you that are members. Members are not people that necessarily pay for anything. They're people that have subscribed to be invited to all these events, etc., like that. And I sent an email to all of you about the DTS business. And I think maybe some of you misunderstood the point of that. A lot of you emailed me back like kind of a congratulations thing. That was not at all the point of it. The point of it is that I don't kind of mind sharing some of the stuff with you because I kind of do this for fun. I love teaching and trading and showing people this stuff. And my point was for this first year and a half, I just, I had a following, word of mouth. I've never done anything really to try to promote business in terms of spending a dime on anything. And things have been going along just fine. And there's a lot of things I've not really paid a lot of attention to as far as a business goes. So I was going to clean up a lot of those things. So I was letting you know that there would be some things cleaned up and you'd be getting some extra emails. And everybody, if you're here, you've already gotten a couple, and you will get some extra emails the next week or so that are just kind of little reorganizational things. For example, when you became a member at DTS, you might have received no welcome email. You may have received a welcome for the trial to the letter. I don't know what you got. So it's becoming just a much more formalized, automated process. So I may send you some of those emails just to see what you maybe missed in terms of that. Just everything's going to be a little more polished up and formalized. There's been confusion on the website and the services page because there was not a central location of like the combination type prices. You go to buy something and sometimes they'll say, well, you can combine it with this. It couldn't. So I wanted to just kind of clean things up is what it was. And I thought, hey, let's get together and have a meeting. I very rarely, as a matter of fact, I've been heavily criticized for not talking about the services that I have that you pay for. I'm always talking about what you do for free. I'm a little sensitive to that because I really don't believe in trying to talk anybody into anything. Let me tell you the story how I got started. You want to hear the story how I got started? I don't have to tell it. If you don't want to hear it, I'll if I don't get 5 yeses, I'll skip the whole story and go on to something else. But yes, okay. I had nothing. I hate to say this. This is almost embarrassing. This is 20 years ago now. This is getting embarrassing. I had no market knowledge whatsoever. Nothing. I sold a business. I didn't know what to do. I didn't have enough money to like retire. Had some money. I didn't know what to do. And you know who got me involved in the stock market? Take a guess who got me involved. I don't think you'd ever guess this unless you heard me say it before. I was sitting in my car listening. Nope. Sitting in the car listening to a commercial, and this guy was on there talking about, and I really knew nothing about the stock market at all. I was never, and maybe that's encouraging for some of you if you're thinking, gee, I'm sure Paul was a market. No, I wasn't on Wall Street, nothing. I didn't even buy or sell stocks at all, even personally, except I had stocks at the company I worked at. That was it. But Glenn knows. But I was sitting in my car listening to a guy on the radio, and he was saying, it's considered a really good year. Stocks go up 10%. I'm thinking, yeah, that's true. To me, that wasn't a big return. I'm thinking, yeah, I want to make more money in it. I had owned a business, I want to get my money to better use than making 7, 8, 10%. And then he says, but do you realize that during that year of 10% increases, that individual stocks often go up 10 or 15% every few weeks? They go up, they go down, they go up, they go down. And he said, why don't you just take that 10% or 15% and then sell it and then wait till the next time and get that 10 or 15% several times a year? I said, wow. All of a sudden that clicked with me. That made a lot of sense. So that guy happened to be Wade Cook, who eventually became Wade Crook. I think he was eventually convicted on something or other. But I went to his first thing, his free little event. And I think it was one of the first things I learned about just maybe the reason I am today with, just offering people information and not trying to sell you crap. Because I remember at the end of his talk, when he said, there's people at the back to take your orders, and people ran to and this is 20 years ago, people ran to the back of the room, literally pushing each other out of the way to sign up for some, stock split announcement service by text. And I couldn't believe it. I was in shock. I got done. I was like, well, okay, this, I get the concept he's talking about, but it all sounds a little hokey to me. I just couldn't believe that. So anyways, it's what sparked my interest. And then I started, I decided to pursue, and I learned options on my own. I learned options by reading a book called Markets as a Strategic Investment. I read the book about 4 times from cover to cover. If you ever read the book, to read the book once would be enough to probably stick toothpicks in your eyeballs because it is so dry and mathematical. But I kind of enjoyed it, and I read it several times, and I started trading, investing using options. And that's all I did. I was self-taught, and for 6 months I tried to read everything I could and study this and study that. During that 6 months, I did a lot of homework. I went through and I took all of the top stock recommendations by Money Magazine, Fortune, all the big. I had 5 magazines, years worth of well, not a years, but several months worth of magazines, and I tracked all of the recommendations. You know what I found out? That all their top stock pickers, on balance between all the magazines, at the end of 6 months, guess how they did? Yeah, I'll say broke even, Joe, but technically they were down a hair, right? So I thought, these are all fundamental pickers. All this fundamental analysis, best pickers in the world, and they can't do crap. How am I gonna top that? So I said, well, that's not the way to do it. So I became interested in charts and started learning on my own. Blah blah blah. Along the way, I ran across pristine.com. I put them on my desktop, and you know what I thought? I thought, I'm a really smart guy. I don't say that out loud, but to myself, I said I'm a really smart guy, and I'll figure this out. So I studied, I figured it out, and I thought I had a pretty good handle on things. And then I had some options on oil stocks one Friday afternoon, and I was getting pounded. I was getting killed all week. I was down way more money than I ever wanted to be down, expected to be down. And I got a break that Friday. They reversed, and Friday afternoon around 2 o'clock, I was almost break even after being killed. And I had a decision to make. I had like another week to go on the options, and I had a decision to make. Do I get out or break even and say, thank Lord I didn't do any worse, or do I hold on because they're just now going in my direction, and I'm going to, shoot myself if I get out of something that is such a great position? So I decided I need to study those charts and determine, are these things going to continue the course that they took yesterday and today? So you know what I did, Joe? I looked at the charts. I looked at them on daily charts, on weekly charts, on monthly charts. I looked at them on 60-minute charts. I turned the monitor upside down and looked at them. I stood on my head and I looked at the monitor when it was upside down to see if that would help. I ate carrots. I ate Jell-O. I ate a smoothie. I looked at the charts again. You know what I determined? You know what I figured out, everybody? Anybody been there with me? Tell you the truth, Joe, I don't even remember what I did. It wasn't the point. It wasn't even the point. What's the point? When the money was on, when the pressure was on, and I was staring at those charts and I had to make a big money decision, what did I know? Right. I didn't know crap. I didn't know anything. I thought I did. I was fooling myself. I'm thinking, okay, here we go. But when it came down to it and I had to make a call, I couldn't make a call. I couldn't decide what to do because I didn't know. That's the day I signed up for a class. That Monday I called Pristine at the time, and I didn't ask about sales or discounts or prices. I just said, hi, here's my credit card. Where do I go? That's all I said because I was disgusted with myself. And that's my story, and that's the way I treat it now. That's the way I treat it now with everybody, is that I feel that, I'm here, and go ahead and try. I used to try and talk people into getting an education because I thought it was only common sense, but I wasn't like that either. So I say, go try it, figure out what you want to do, and the day's going to come probably where you're going to say, you know what, that education is awfully cheap compared to what I could do. So that's where I stand on the whole thing. So there's my long story. You probably should be sad that you asked. Let me hit a couple points before I run through these couple of slides here, because these slides will be really, really boring. I had a guy get a hold of me who was actually, he was a client of Greg Thurman's, who does that spreadsheet. And, Greg Thurman has, if you go to my site, there's another page called the Other Stuff page. And on there, I'm going to be putting some other stuff. And right now, the only thing on there is the Greg Thurman spreadsheet thing, just because he's the next student of mine. I think he has a great spreadsheet. It's not a big deal. I don't care if you use it or not, but if you're looking for a spreadsheet to track your stuff, he's on there. But he has very, very high comments for me. And some of his clients, saw his comments on his website about me, and one of his clients called me. And it was an interesting conversation. I don't know if this is even possible. You guys have to tell me if this is possible or not, but he claims to have spent over $50,000 on an education in the markets. I know there's packages of $25,000 out there. I don't know how you can spend 50, but he wanted me to then coach him, and he was willing to pay a ton of money for coaching. We had this terrible misunderstanding. He wanted me to coach him, and the problem was that he had learned. He told me what he learned, and for everything you learn, there's some value to it. I'm not going to say everything's garbage out there, but it's a totally different way than what I trade and what I know and understand. And some of what he learned was just plain wrong. It was just stupid. I don't care what it cost him. It was just wrong. And I tried to explain to him, look, what you're willing to pay me for coaching, here's what we do. Just take my seminar program, and you get all the coaching you want with the seminar program. But I have to teach you what I do first, because how can I coach you on what you're doing when what you're doing is just wrong? Do you guys understand what I'm saying? And we had kind of this weird discussion where he was willing to pay me more to coach him than to take the seminar program. I'm like, you don't get it. I can't coach you on what you're doing because I don't agree with it. It's dumb. So it was kind of a weird conversation, but it made me think too, there's so many people that probably don't even realize when you sign up with seminars with me, it's not like what you probably expect. I make a commitment to get you to understand this. And right here now, there's probably a dozen people who take the seminar program. And if I'm lying to you, one of them is going to speak up and say, oh, Paul's not telling the truth. But nobody can say that, because you email me, I get back to you, and sometimes I'm the one that suggests, hey, let's get in a chat room, let's go over this because I don't think you're getting it right. And maybe there's somebody in here now who's been in a chat room with me. So I do whatever is necessary to get you to understand this stuff. I want you to understand it. I have some pride in developing good traders, and that's how I look at it. And that is included in what I do. People ask me, well, how much do you charge for the coaching program after the seminar? Well, there is nothing. See, the whole seminar program is under $3,000. Glenn's been there. Thank you, Glenn. And that's all there is. You can't spend more money. And I do that on purpose because I'm trying to just help people learn this. So you have to pay something, but it's not 20. And now people ask, well, $25,000 program. What can you get out of the $25,000 program that I do not offer? There must be something. What do you get out of the $25,000 program, everybody? I'm not bragging. I'm just telling you the way it is. You don't like me for saying this, that's fine. But what do you get from the $25,000? And there is a $25,000 program out there. As a matter of fact, the guy who's part of the program used to be at Pristine a long time ago. Yeah, I mean, number one, there's a good chance that you will get taught by somebody who is taught by somebody who is taught by somebody who may or may know what they're doing. And I'm not exaggerating. I went to like OTA is one of the places. I actually went to one of their free events a few years ago, just as I kind of felt like undercover spy. It was kind of neat. So I went in there just like, hey, I've never heard of the market before. What can you show me? And they did a little free seminar, and there were like 3 other people there with me and my wife, and we went through it. And, so I listened to him, and then I asked a couple dumb questions. And, the guy, he knew the script of what to say and to teach, and he's the guy that was going to be doing my class if I sign up for the class. And he didn't know. I mean, he couldn't answer a real in-depth question. So that's one bad thing. Another bad thing is what you get is a lot of information because you need to be justified for charging that price, but it's stuff you don't use. I tell people I have in my folder right here, I have literally 7, 8, 9 other full-day seminars I could teach. I do. I could add them to the program. I could come out now to the seminar students and say, hey, you know what? Here's another seminar you can take. Here's another weekend. Here's another program. It costs $8,000, $10,000, $12,000. I don't do that because everything else I could teach you wouldn't amount to 5% of valuable information. I want you to be aware of that when you look around. 6, 7, 8 days of learning stuff. You start getting into stuff where you don't even recognize the title of what you're listening to anymore. It's all great information to share at a dinner party, but none of it makes you any money. I teach the stuff that makes money, very precise, very direct, and after that's years and years and years of honing it down. And that's why it's cheap. It's $3 Saturdays in a row is the basis of the program. It includes coaching. It includes a couple times we get together for practical application review days, a scanning day, everything. So I'm here just kind of bragging about that right now. Let me go on. They do not make those. Yeah, well, I don't know what some of them do, Glenn. Maybe some of them do, don't. I'm not sure. But, I mean, the level of understanding is just not really there. I sent you, in the mail, I sent you a price sheet because there's never been a concise. Now, this is also listed at the top of the services page. So you don't have to worry about it in here. If you go to the services page, and again, please feel free to leave this anytime you want to. I am just literally rambling on about, these are for people who are thinking of maybe paying for something. If you go to the top of the services page, there's now, again, this has been somewhat redone. It's still in the process of being redone. But up top, there's a nice little price sheet up there. You click on it, it gives you a price sheet. And here's the price sheet. There's 4 things that I offer that you pay for. The trading room, the daily market letter, the long-term trader letter, and the DTS seminars. In addition to that, and here's the prices for them, is the trading was $147 up to 50 people. We've been in the low 40s, right around 40 for like the longest time, so it's still $147. There's an annual rate that's discounted 10%. There's a market letter that's $94 a month, annual $994. Long-term trader. The long-term trader is a long story. Let me explain that to you real quick. When I opened DTS, I did not have the long-term trader letter. Why didn't I start DTS with the long-term trader letter? Anybody want to take a guess? Why did I not start with the long-term trader letter? I didn't offer it until April, about 6 months. It was about a year ago. It's almost a year now. But it was about 6 months after DTS opened. Why didn't I offer it? It was not on the original thing. It was just the room in the daily market level. I had a terminal disease? Nope. Nope, not softball. Well, you're close. It was close to softball. You know why, honestly? It's a lot of work. If you notice, I've kind of set up DTS in a very selfish way where I don't want to be spending a lot of time on the business aspect of this. I want to teach you guys. Don't get me wrong. I mean, I'm committed to the students, to teaching them, to take the seminar program, to doing what's necessary. But in terms of everything else at the business, and the long-term trader, even though it's hard to explain, I'm taking the trades, so it's not a big deal to come up with the trades. The tracking in them is the problem. See, in the trading room, it's all live. So it's boom, boom, boom. Here's what I'm doing. Here's what I'm doing. Done. It's simple. It's a piece of cake. On a long-term letter, something goes to be triggered in the middle of a trading day. Think of all the rules that have to happen. Because if I offer this letter, simple example. I say buy stock XYZ over $25. Well, it gaps up that day to 26. What do? Do you buy it because it's over 25? What opens at 30? Do you buy it because it's over 25? What opens at 25? Do you buy it? You see, there's all these things that can happen, and there's a lot of them in terms of when to enter, when to exit, how to exit. So this whole rule book has to be made up in terms of how I treat it as a rule. And it also becomes kind of the basis for tracking it, because if somebody else is going to ever subscribe to the letter, you want to see the results. And to have results, you have to have real rules that you're following. So it becomes very difficult. And open positions, half is closed, or a third of it's closed, a third of it's open. Here's the new stop. Here's the new target. Here's what happened. It gets to be just a lot of stuff. Why did I do it? Why did I end up doing it? Well, because I did a similar letter before, back at Pristine. And I had a very loyal following. And I had several people asking, begging, pleading for me. They can't day trade. Please do the letter. So I started it. And initially, it was just this group of people that wanted me to do it. So I did it. And you haven't heard a lot about it. Like, I've never really advertised it much at all. As a matter of fact, if you click on anything in the site right now, the link is dead because we're changing some of the descriptions about it. The pricing has changed for it over time. The policy of it's changed because I didn't ever push this, because if you don't get it on my reputation, what do you want to see? You want to see the results. Well, I'm waiting for 1 year here. So next month, when it's a year old, show you some results, and I'll push the letter more. So in here you see there's a price for the long-term trader, and it says that this is an introductory price. Well, why introductory? Well, because it's not really going to be rolled out until this next month. It's been out for a year. You can subscribe to it now. So there's prices, and the prices are going to be a little bit more than that in May 1st after the official rollout. So There it is if you want it on good faith of what a good guy I am. There it is. And this is one case where the annual price is going to be kind of the real price, because people should subscribe to this annually, because the long-term trader does not come out every Monday or every Wednesday. It comes out when there's something to do. See, one of the other stupid things is swing letters or long-term letters that come out every Monday. It's like, I put it out when there's stuff to do. When there's stuff to do, we push the pedal. When there's nothing to do, we do nothing. So you may not get one for 2-3 weeks, or you may just get an update. And all of a sudden, like this last 3 weeks, it's like people are probably sick of them in their mailbox because I'm out there doing or updating every other day for the last couple of weeks. So generally, it should be an annual subscription. So the monthly rate's going to be disproportionately high, if that makes sense, once it gets going. There you go. These first three things are called getting fish. You're given plays, given plays, given plays. If you want to learn to fish for yourself, that's the seminar program. The seminar program, if you said to me, Paul, yeah, that's what it costs initially, but give me everything you would ever sell me, that's it. There's nothing else. If you gave me a blank check, I can't rate it for more than $29.97. That's all there is. So that's the seminar program. Now, I never have sales because I don't want to rush people into doing anything. I don't want to hurry you into a seminar program, so the seminar program is never on sale. There are combinations. If you want to buy more than one thing, it deserves a discount. If you want to go longer than a month, it deserves a discount. So here's the official, which never been out before, combination pricing. So you can read this over yourself. I'm not going to read it to you, but you can have the room and the market letter together at a special price. You can have the room and the long-term trader together at a special price. You can have both, all the services. No, there's both letters in the room at a special price. Or you can have, the seminars. This really is nothing more than the seminars plus the 3 up here. There's nothing special about the discount there. Okay. Again, you can read that over on your own. You want to buy fish. You want to learn to fish. We all know that analogy. The letters in the trading room are getting fish, so to speak. The seminars are learning to fish. Either way is good. Both are good, whatever you want to do. I talked about the long-term trader. Again, it comes out as needed. It is for long-term market analysis as well as the long-term positions. They are given. And if you're interested, this section is being redone a little bit on the website, so it's not great to look at it now. You can go to the service page and look, but the link to it is dead because the prices on there were wrong and the policies were wrong, so it's kind of being redone. But if you're anxious and you want to email me, I'll send you, the last few that came out so you can see. So if you're interested, email me. I'll send you a couple of samples. I should have had it ready, but it's a little more complicated than just popping out a thing for you right now. With the seminar, do you get all the letters? What's it? No, Joe, it's right. It's right here. They're two separate things. And again, Joe, here with the seminar, with the seminars, you pay the $3,000, and then you get a year's worth of letters for $2,400. I'm damned if I do, I'm damned if I don't. If I put all the letters in there for free, somebody else is going to say, well, Paul, I just want the seminars. I don't want the letters. I don't care about them. So discount. So it's like, it's extremely, I think, cheap prices, but they're separate. There's the seminars and there's the services. So they're separate prices. You can get an annual if you want to. But hey, I know somebody that charges $5,000 for a knockoff of my Gap class, and that's all you get is one class, no repeats, no letters, no anything. So for $5,500 here, you get everything that I have to offer forever and ever. So can one use the live room for day trading for retirement? Well, it depends what you mean for retirement. Tono, you can't, when you say retirement, if that means to you an IRA, you can't take an IRA and day trade. That's not allowed because you can't margin a day trading account, an IRA account. But if you mean, if you're retired, can you get in there and make extra money? Yeah, of course. Anybody can. But there are rules for IRAs where you're restricted from doing some stuff. And if you take a position in an IRA, you have to wait 3 days for settlement, blah, 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 blah. So you can't day trade an IRA account. But if it's a non-IRA account, certainly you can get in and earn extra money. As a matter of fact, several people in the room are people that are retired or quasi-retired, or there are people that are consultants and they're around 2 weeks, not around 1 week, whatever it is. Okay. Yeah, with cash, yes, true. Yes, you just can't go out on margin. You're right. Yeah, you can't go out on margin, Tono. You're correct. All right, so there is that. What else we got to talk about here? Trading room. If you want to stop by and check out the trading room. You can sign up for a trial for that. Again, on that services page, there's some descriptions. Here is everything in one. If you want one little document with everything you want to know about the trading room, here is my favorite little document. So there's everything you want to know about the trading room in one precise little document. And if you want a great little concise document about the seminar program, here it is. And you can find this yourself on the website, but sometimes some of this stuff is, whoops. Yeah, sure do, Tono. Every day, at the end of the day, I have a very precise documentation, including the strategy, entries, exits, profit based on so much, money, risk, et cetera, all that's in there. And when you're in there on a trial, you can view the last several weeks' results. Usually keep 1 to 2 weeks. Sometimes I slop and leave more in there, like right now. There's more than that in there, I think. I forget to clean them out from time to time. Sorry for the slop on the screen there, but there is the seminar thing. So, and if you want a trial to the room, here is the page for that. Just making it convenient for you, for those of you who don't like to fiddle around on websites, which I don't blame you. Seminars. I have only a couple people that are just taking classes individually. Because the classes are like 15 and that's not true. That's $12.97. That's not even the right price. $12.97. These classes are like 13. The whole thing's $3,000, and the whole program includes the. Let me talk about the practical application review day. It says it right here. When you have the seminar program at $3,000, you get all the classes. You get unlimited retakes. Oh, one of these slides, by the way, notice what it said here. It's kind of a little joke here. For all services, there are annual rates, but no lifetime rates. Why are there no lifetime rates? Good, some people are finally leaving. Why are there no lifetime rates? Some of you found this out. It's always Geiger. Yeah, well, many of you found out that you didn't know it, but lifetime means the lifetime of the company, not your lifetime. You assume when you sign up for something lifetime, be careful if somebody starts pushing lifetime, it usually means the company's coming to an end. But no, I've told you guys that I plan on retiring in 4 years from when I started this. I will update it in 2 years. Now, I'm a year and a half into that, so we're talking about I'm going to update you in the next year sometime, but maybe retiring in 2.5 years. So, I'm not here to take your money. I'm here to help you. So, I'm not pretending to have some lifetime rate and then ditch out on you. So, you can't get more upfront than that, can you? Who said I'm old, Eric? You are not getting any service, even if you ask for it. No trials, nothing. You're out of here. I'd reach down and kick you out of the room, but that would require me use my hands, and I'm not using them right now. So here's something really important, guys. Here's something really important. One of the things that I do is called a practical application review day. Here's something to me that's really important, guys. If you've ever been trained on anything anywhere, it's one thing to sit in class and say, yes, I get it, right? Oh, thanks, Ajit. I didn't even put slides in for that. I'm such an idiot. It's one thing to let me finish the PARD thing, practical application review day. It's one thing to sit in a classroom and understand what's being said, and it's another thing to go out in the real world and do it. Is it true? Is that pretty accurate, everybody? True? You guys have volunteered to sit here and listen to me this late. Is that true? You can learn something theoretically, but applying it. Think of a doctor even, here's how you operate, right? Here's how you do an operation. You take the scalpel and you cut right down the middle of the chest. And then you take out this rib cutter and you go bam, bam. It's one thing to learn. It's another thing to go do it, right? And that's why doctors intern for a year before they even are left alone with the patient. Well, it's true in trading too. And there's a point when I'm teaching the first class where I stop, Glenn, right? I stop right about 11 o'clock the first day and I say, look, this works every single time. I guarantee you, this pattern is exactly what prices do every single time. I promise you, I guarantee you, I'll prove it on any chart you want. But here's the trick. You got to take this perfect little theoretical slide I'm showing to you and present it and see it in the very sloppy market every day, right? And then I show you the market. I say, here's what you typically hear. You have to understand that this is this. In other words, you have to be able to take and understand that this right here is an example of what it is an example of what I just taught you. And that's what Practical Application Review Day does. I go through the recent trades I did for the last 3, 4, 5 days and say, look, here, and we just did this, right, Glenn? I say, here's the manual. Here's what I showed you. Look, here's what I did. This is exactly what I taught you to do. I say in the class, you know, what I'm teaching you is what the stuff I do every day. It's not some theoretical thing. And sometimes you don't recognize it. And that's what these classes are important. In fact, they're so important that they're scheduled for once every 6 weeks, every seminar cycle. I've been throwing in an extra 1 or 2 every time. So I'm trying to do them every couple of weeks for the seminar students to say, hey, let's go take a look. Let me show you that thing I showed you where we talked about how that transition D, the retest and failure, I would never ever use that in a vacuum, but if you combine it with something else from a bigger time frame, then it's a great entry. And here's what I did. Here's the trade. And everybody goes, oh my gosh, yeah, that's exactly what's in the manual. I get it now. That's extremely important to do. Extremely important. I said also I was going to talk to you about I never even got into this. I'm so, from the business side, I'm such a slack at this. But on the site, I have a page now that's there, so you can read about it. That talks about prop trading. Now, if you've never heard of prop trading, you're going to think this is the greatest thing since sliced bread, and it is. It absolutely is. And for those of you who have heard of it and you're scratching your head right now, let me just wait. If you've never heard of prop trading, what it is like on Wall Street. I mean, people can get hired to trade professional money. You got to be really good. And then you come in with no money and they say, here's an account, trade money for us and we'll give you part of the profits. Okay. Well, the problem that came out was that if you click on that link I just gave you, you can kind of read along. I'm not able to pull it up. Yes, I am. Am I? Yes, I am. I can. Here it is. There we go. How's that? So the problem that's come up, of course, is a lot of people want to day trade. And there's a rule that came out a long time ago that says you have to have $25,000. What's the point of that rule, everybody? This is not a broker rule. It's a rule from FINRA. You can't avoid it. It's called the pattern day trader rule. What's the purpose of that rule? Anybody know the purpose of that rule? And this is for day trading only. This is, if you're going to day trade, and they define it, as buying and selling in the same day more than, 2 out of 5 consecutive days. I don't know what the exact rule is, but basically you're prevented from day trading, and it's totally effective. You can't get around it. Yeah, protect you from yourself. I think this is the reason I love talking about this rule, because I think this is one of the stupidest rules. I'm for helping everybody, and I think this rule hurts people. Because why they make people go out and mortgage a house to get $25K to put in an account just to lose it all, which is what most new people do, to me is exactly backwards from the goal of the thing. You should be able, it would be perfect to be able to take $3,000, put in an account, day trade, lose it, get all frustrated, throw your monitor through the window, start over again, because you learn that way and you're losing small change, not big chunks of money. And naturally the goal is, I'm being a little facetious, the goal is to learn how to trade and to do it properly. And you should start off, whenever you start off, you should start off paper trading, then risking $5, $10 and work your way up. But regardless of that, people do it wrong and they do have to be protected from themselves. But the best way to do it is to have a small account to work with. So anyways, it has been an obstacle for people because they cannot day trade. And there's people that maybe have all their money in longer term accounts that can't pull it out. There's people that maybe they don't have a lot of money, but they want to try day trading to make some extra money, and they can't. Well, if you take that proprietary trading concept, what happened is places set up shop where they open an account. And the goal was not to hire professional traders to come in and trade it. It was to let people come in who maybe don't have a clue what they're doing and let them trade the big account, but have them put up, it's called risk money, to cover their losses. And it's great. It allows you to come in and to put up $5,000, and you can trade $50,000 worth of stock, just like a day trader. You are a day trader. You can go in and out, go in and out. You can buy 50, sell 50, buy 50, sell 50. And if you have wins, they get credited to your deposit, and you can pull them out whenever you want to. And if you have losses, it comes out of your risk deposit. Now, somewhere here you have to be real careful because there's different rules at different places. So don't quote me on what I'm saying for every place out there. Now, if you are familiar with prop trading and you have some reservations, let me say 3 things to you. Number 1, money is New York Chase Bank FDIC insured. Chase Bank FDIC insured. So there's issue number 1 for some of you. Number 2, from the minute you're set up, you can get set up in a couple of days and be trading your real money. You can lose all your money if you want to in 3 days. This is not simulator, not fake. You're trading your money. Now, you can go in a simulator if you want to learn. I suggest you do. But there's no hoops to jump through. There's no requirements. There's no program. There's no levels. It's your money. Do what you want with it. Number 3, I am not requiring you to pay a upfront fee called an educational fee. Most places make you take a quasi-educational program, which is really nothing more than an entrance fee. I don't want to do that. If you're not interested in education, you're not going to get anything from it. However, to encourage you to do that, I do have a package put together where you can get the full seminar program and get into the prop program. And if you want to do this and just add more capital once you have your account, you can add more capital and get 10-to-1 leverage. So it's $6,000. You would go in, you would get my full program, which is the $3,000 program. You get a month in the trading room. You can use a simulator for 30 days. You get 95% payout. Your buying power on day 1 is $30,000. But and I suggest you just leave it there until you know what you're doing. But then if you start to do well, you can, for every $1,000 you add, you get $10,000 in additional buying power. Because, Ajit, this is the seminar program package. What you're getting for $6,000 is you're getting the full seminar program, a month in the trading room, all the benefits of the seminar program, blah, 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 blah. Now, if you don't want to do that, that's what I'm telling you up front. I'm here to help you guys. So if you don't want any education, just go back to here. And then it's a $5,000 minimum drop into here. And you get just 5-to-1. Maybe you get nothing from me. Then you're just, and if you email me about this, the first thing I'm going to do is send you a little letter that says, I am not part of this. I am not part of this company. I'm not a principal on anything. It's simply an affiliate I'm working with, because after all this time, I think this is the perfect place for people because of all the reasons I told you. Every negative you could have ever heard out there about prop trading is not here with this place. So if you're interested, you email me. I'm going to email you back a letter that says, do you understand this? You say yes. And then I email you, put you in touch with this company, give you some more details, and then they will give you all the final details that there are. There are really no bad surprises to anything. And again, I would encourage you, this is, I think, an outstanding concept to do this right here. And again, once you're set up in your account, if you wanted to add 2,000, you'd go up to 50, whatever it is. Any questions, problems, issues, whatever it is? You know my email address. And please, anybody who is, I'm very sensitive about this, anything that you looked into this or you don't like something, please tell me. There is not supposed to be any kind of catch here. There's no kicker. There's no catch. There's no anything. This is just, I think, good stuff. And if you don't agree, I'd like to hear from you because I want to know why. I don't want people, if there's something I don't know about or I'm not seeing or understanding or you don't agree with, I'd like to hear from you. Okay? So that pretty much wraps it up, guys. Paul, but you know what I'm going to do for you, Paul? Are there some of my students here? Don't leave, guys. Would somebody answer Paul's question? Is it really possible to learn all you need to learn in just one seminar? The way you offered unlimited sessions, it makes me wonder why one session is even an option. Anybody want to answer that question? Because Paul, obviously you're new. I love your name, by the way, but obviously you're kind of new with me because you wouldn't ask that question if you weren't new with me. First of all, well, if there's somebody here, yeah, there's a couple people typing. I'm going to direct you somewhere on the site, Paul, just so you don't think my answer is a bunch of BS. I want you to go to my homepage when we're done here and scroll down to the warning section. There's a thing called warning, okay? And it specifically says there, Paul, that you will not be able to trade after your first round of seminars. First of all, understand that the seminar program, Paul, is 3 seminars, 3 Saturdays in a row. That's the program. Mastering technical analysis, mastering advanced tactics, and mastering gaps. Okay, those are the 3 classes that are part of the program. When you take all 3 of those, Paul, you won't be able to trade your way out of a paper bag. Why is that? Very simple reason. Yeah, Paul, assuming that you're one of the smartest people in the world and assuming that I'm one of the best teachers in the world, and by the way, the latter part of that is true. I don't know about the former part. You will only absorb about 15% of what I teach you the first day. Now, I would be scared to death for anybody to go out and try and trade without knowing 90% of it. And that's why I tell you, Paul, it's really kind of a, you're looking, and by the way, I'm going to, for my seminar people and for everybody, I'm working on a 4-month action plan, if you will. And that's what I really look at, Paul, as a 4-month plan. You take the seminars, I have you do certain things in between the seminars, you start paper trading, maybe you throw $5 at trades. You take the seminars the second time. Paul, when you take the seminars the second time, you're going to jump from 15% to 50% of understanding. The third time you'll get to 80%, 85, 90%. Okay? That's where you need to be. Now, Paul, I could tell you something different, and you could go somewhere else, and somebody else will tell you, oh, you take my class and you'll be an expert the next day. Well, it's all crap. You know that. I know that. There is no magic formula. There is no magic secret. There is no magic indicator. There is no magic thing. It's just understanding the language of charts, and it's not hard, but it takes a little time to learn it. So along the way, you can be following along in a trading room or in a letter and making some money as you go. You learn this, you take it. Maybe you're really smart. You do okay after the first classes. Maybe the second class you start to do good. But I don't tell people that I expect you're going to be able to make money after the first class. And it's on the website, on the home page. It's been there since day one. So I'm not trying to blow any smoke up anybody's, you know what, telling you that after the first Saturday you're going to be a genius, because you're not. And I wouldn't guarantee that any one of you can walk and chew gum at the same time, let alone understand technical analysis to the level to make money. But I can teach you, and I will show you everything you need to know, and you will get that understanding after a couple rounds of classes. Okay? Right, Joe, you go to class, you get some experience. You come back to class, you get some more experience. You do it the right way, you don't be stupid, and you'll learn it. All right? Great question. Glad you're here. Good nighttime reading for you. All right, any other questions? Yeah, it's got to scroll way down to warning, Paul. It starts off, people who are new to trading. Listen to this opening. You know, I haven't read this, to tell you the truth, in a long time. People who are new to trading tend to lose money consistently and ferociously. I believe in statistics, and that's simply what is this true statistic. I understand why. I'll explain in a minute. Ready for this one, Paul? Once people decide that trading is more difficult than they first imagined, they tend to get an education. After that education, they become even more consistent at losing money. And sometimes even lose it faster than ever. Let me explain why. And it goes on to tell you about that. Obviously, I think there's nothing better you can do for yourself than to get a good education. But just don't trick yourself into thinking that you're going to sit there for a few hours one Saturday and become genius of the year. You will, but it's like anything. It takes some understanding, some learning, some experience. All right? I'm done, guys. Well, Paul, it's not a one-time offer, Paul. Sorry if I confuse you. It's a one class at a time offer. Any class you take, you get unlimited retakes. Oh, that's your confusion. If you want to take just the first class, Paul, you can sign up for it. You get unlimited retakes. You can take it for as long as I'm doing this, for years. Okay? Unlimited retakes on any class you take, but you just get the one class. And you can still ask me questions about the class, of course, coaching to that extent, but of course, the coaching would have to be limited to the subject matter that you understand, which would be the class you take. Okay? So unlimited sessions per class. And there's one little catch too. You can't take the second class without the first class. It's a prerequisite because you wouldn't understand the second class without the first class. You can take the third class all by itself because it's a little bit unique. It's on gaps. You can take the first class by itself. And I only have a few people that are doing that. Right, the total $29.97. Don't forget the 97. Let's call it $3,000 for the total program. That's all 3 classes and the unlimited coaching and market review and practical application review days, scanning night, access to me, the whole thing. Right, that is correct. You can't spend any more money for the program, even if you wanted to. It does not include the services, though, because people may or may not want those. The letters or the trading room to be separate individual things. Okay? Yes, it's always unlimited retakes, Paul, correct. Yes. One class, 1247 for the one class, unlimited retakes for the one class. If you want to take just mastering technical analysis, I have 3 or 4 people doing that. I don't know why. One person took them one at a time. I don't know why, just maybe to get a feel for me. So he actually kind of ended up paying more to take the 3, but he wanted the option of going one at a time. But so now he's in the program because he did take all 3 eventually. But other than that, I have just a couple people that are, I think literally 2, maybe 3, that are just taking the first class because I think they're people that are maybe just longer term and they feel it's all they need. I don't really agree with that if you read the website, but that's whatever they want to do. But if you did that, it would be unlimited. But yes, unlimited, all you want, all the classes, $29.97. You're correct. And it starts this Friday. Oh, I should have told you guys that too. This Friday is the half-day class that everyone's invited to, and then Saturday starts the seminar program that you have to pay for. All right, any other questions? I think I'll say any other questions, feel free to email me. Thanks, guys. Have a great evening. I'll see you guys whenever I see you next. Next free event is Friday. Friday, we'll get an invite to the half-day class that everyone's invited to. And by the way, if you are doing the seminar program, that half-day class is part of the class. It's something I want you at. All right, guys. Have a good one. See you Friday.